What does gold, foreign currencies, crypto, and even corporate real estate have in common in today's investment world? They are all ways you can build diversification into your portfolio. Jedidiah Collins here, former NFL fullback, certified financial planner, trying to make financial literacy more current and possibly even a little cooler. Why is diversification key for you as you look at your portfolio over the next 10 to 40 years? First, let's talk about gold. And if you've seen Huntrix, Golden is one of the top songs in the world. Gold recently has risen to over $4,000 an ounce as of October 2025. Why? Well, because uncertain times bring economic uncertainty. And if there's political turmoil, the dollar feels weaker, or global crisis, currently all three are going on, investors begin to flock to gold as a safe haven. It's a tangible asset, tangible meaning I can touch it. And this asset has historically preserved wealth when everything else feels unstable. And I emphasize there, preserved wealth did not create wealth, but kept it as a store of value. What are the key drivers? Well, there's concerns about the United States economy. There's government shutdowns currently happening, and there's global conflicts boosting demand for many things. The dollar is declining, which makes gold more attractive as a hedge against currency depreciation, hedge being a bet against. And as you look at market expectations, the Federal Reserve rate cuts make gold even more appealing compared to low yield bonds. If the Federal Reserve continues to lower interest rates, that means bond value will go down and gold looks pretty good. Another one is going to be that central banks and private investors are diversifying their reserves, that cash storage, into gold, further fueling the demand. If those guys want it, everybody's price is going to go up. And lastly, many are jumping in because they don't want to miss out on the rally because prices are being pushed, crossing over 4,000. Analysts warn about short-term overbought conditions, but many expect gold could challenge $5,000 an ounce if these drivers continue into 2026. Gold isn't the only way to diversify these days. Consider foreign currencies. Investing in other countries' currencies help protect your wealth if the dollar does continue to weaken. For example, holding some euros, yen, or even emerging market currencies can act as a hedge, there's that word again, especially if those economies continue to grow stronger. People look at emerging markets and say, it's very risky. But if they go in the right direction, their currency is going to become more stabilized, providing a store of value and possibly even a return. That does come with some risk. If you look at things like the euro, well, they're struggling as well, but having two different buckets, again, diversification. Then there's cryptocurrency. Yes. Crypto offers a non-traditional diversification option. Well, we all accept crypto is volatile, which means it can skyrocket tomorrow. It can also fall off a cliff tomorrow. It all depends on what those holders are all wondering at the same time. While crypto can be volatile, many do see it as a hedge against fiat currency being the US dollar, and the risks of a fiat currency. One of those risks, inflation. So crypto can actually hedge possibly against inflation, especially during times when government policies and currencies are unstable, which, as we wrap up 2025, is one of those times. So as you look at gold, as you look at other currencies, as you look at crypto, you can all debate how it is going to hold its value against the United States dollar. I'm not betting against America, but I am willing to say diversity is never a bad thing. Here's a modern twist on diversification coming from the corporate world. Big companies like Walmart are starting to diversify. You might think of Walmart as just a retailer, but they are now entering the real estate game as an investor. Recently, Walmart bought the Monroeville Mall in Pennsylvania for $34 million. not to open a store, but to develop it into a mixed use center with retail, dining, entertainment, and even some housing. Whoa. This move is part of a Walmart's broader strategy to become a landlord and diversify their revenue streams. Yes, we can sell you cheaper goods, but we also want to have different, diversified revenue streams. They're effectively turning their assets into real estate investments, a move many large corporations are making to hedge against the declining retail traffic and online competition. If people aren't coming into your store and everybody's selling stuff online these days, you got to find a new way to make money. Why does all of this matter to you and your investment portfolio? These examples are all a reminder that diversification is not just about owning stocks and bonds, or many kinds of stocks or many kinds of bonds. It's also about spreading your wealth across different asset classes. Precious metals, foreign currencies, crypto, and as you just heard, Walmart's investment in real estate are all great examples of diversifying. That will protect yourself from risks that can hit any one sector. Where we want to go in investing is to remove one catastrophic event from destroying our financial plans. The takeaway today is in uncertain economic environments, diversify your assets not only within your investment portfolio, but also across different currencies and investment sectors. Gold remains a strong safety net, foreign currencies are interesting, and crypto expands your hedging options. Even companies like Walmart are showing us that real estate can be a powerful diversifier too. Stay proactive, keep speaking the language of money. We appreciate you watching the Money Vehicle Movement podcast. Go ahead and drop a like or a follow, and we will see you at the next stop.